Okay, good afternoon, everyone. Thank you so much for taking the time, first off, and most important. I also want to apologize. We actually had some technical issues with the GoTo webinar software, so that's why we're 6 minutes late here. So my apologies, but we'll definitely make it up to you at the end of the call. I promise you that. I just want to mention a couple things before diving in. I think that in this market right now and what's going on with your consumers, your prospects, 401k, this whole cryptocurrency, Bitcoin, everything exploded at one time, and now things are very different, right? Things are down 30, 40, 50%. And the IUL story is just so impressive, okay, especially during this time. And as insurance agents, right, advisors, you always need a great story to tell, especially to get the door open, or when you do get it open, right? You have 2 or 5 minutes to get someone's attention. It's important for any insurance agent out there to have the right tools in their toolbox. And you hear about all these great IUL products and technology and sales platforms, and this is going to help you sell a $10,000 IUL with your eyes closed. And sometimes there's so much noise out there, it's hard to focus on one carrier, one product, one platform, and at the end of the day, you wind up not getting started with any product or platform, and which is a shame. So what we wanted to do today was something a little different. We wanted to talk about, yes, a great IUL story, great carrier, and what we also wanted to talk about and share is our own personal story here at Levinson. So as you know, we have over 90 carriers, and it's our job to go out and find the best products and carriers for our agents. And we try to have as little overlap as possible. Okay, and I'll give you an example. Like we don't want to have a Burger King, a McDonald's, and a Wendy's all on the same street corner, right? Each franchise or storefront needs to be a little bit different. So when you look at our portfolio, I want you all to understand, because just a week ago, we're talking about a different IUL with a different carrier. What I love about today's presentation, and you all need to feel comfortable when you're proposing this to your prospects and clients. When we talk about today's presentation and we think about a carrier like Allianz, this is all they do. Okay. And when I get a call from an agent, and maybe it's an existing client and they want a IUL or cash accumulation vehicle for their children, this is the one-stop shop, okay, for IUL. Okay. When you talk about commissions, when you talk about a non-med program up to $3 million, right? E-app, e-delivery, that's easy as 1, 2, 3. Scholarship approved. Okay, another big deal. And the reason why, think about value add. What makes you different than every agent that's out there on the street corner pitching the same thing? You're giving away a 1-year scholarship to little Johnny and little Shelly. Okay, so at the end of the day, even if both agents are proposing the same product, same carrier, right? Same client, guess what? You're going to get the sale every time, because you're giving this $40,000 scholarship to little Johnny, okay, where it's going to help tremendously with a 4-year tuition at any of our 430 colleges. So you need to think like this. And that's why when I say the IUL one-stop shop, I'm not saying that lightly. I'm not saying it because Eric is joining us today and we're live. No, I'm saying it because look at all of those bullets in front of you. Okay, this isn't just a generic template that we throw together every week. So let's look at this for a second, and just let's literally take 1 second, jot down notes, use that Q&A box, okay, and let's think about this. Uncapped accounts, okay. Let's scroll down to the middle section. Eric's going to talk about this a little more. Rate lock and auto lock feature. Okay, where zero is your hero. So a time when everybody's worried, right, not about retaining what they initially put into an investment product, but they don't want to sink below that waterline, okay? Great option, IUL. Non-med underwriting to $3 million, real non-med underwriting. This isn't where, if you're not preferred best, you're knocked out of the program. No, this is real, no exam underwriting. Okay, living benefits built in, no charge. Table 2 shave reduction program. That's real. Okay, table 1 or 2, boom, you get standard. That alone will save a case. Okay, we just saw it happen on a $33,000 case recently. Okay, the e-app and e-delivery, awesome, but most carriers have that these days. Sage, huge hook, huge differentiator. Premium finance division, okay, they're not going to turn away as long as it's through an approved third party, which we have 2 of the top premium finance vendors, okay, they're going to look at it. And if it's a good case, they're in. When you talk about marketing material to use on social media, on your website, through Ringy, through eBlast, whatever the case is, they have everything, and it's in our marketing library. We even have some excellent co-brandable marketing pieces that we can set up for you at no charge as well. They're approved in our IUL sales presentation system, which is another big deal, carrier approved and compliant. And we have that new IUL quoting tool on our website that's free for you. Okay, 12 companies. Well, Allianz is being worked into the program as we speak. And if you have, obviously, a challenging case, a large case, if we need to reel in Eric, okay, we can set up a conference call and get him on the phone as well. So just keep that in your back pocket, as we go throughout these slides. Okay, what we're going to do at the end is we're going to have our question of the day. Whoever answers first and correctly wins. I have the new Fire 8 Amazon tablet and an IUL prospecting book with your name on it as long as you answer correctly and first after I ask the question. Okay, every week we get like 10 people that they think they know the answer to the question, so they answer before I even ask the question. No, that doesn't count. Okay, so wait until I ask the question, but we're going to do that at the end, and then I have another little surprise giveaway because of our technical issue that we had just a few minutes ago. Okay, let's keep moving forward here. So real fast, I want to talk about our hottest platform right now that's blowing up. And I don't care if you're talking about final expense, mortgage protection, IUL. We just had a $1.32 million annual target case placed, okay, literally within 4 weeks ago. And the agent, okay, and I'm not going to say any names, but he's an older gentleman, okay, in his mid-80s roughly. Well, he's using both of these platforms, okay? This guy just placed the largest case in history, $1.32 million, okay? And this is the lead program, and this is the CRM program he's using today. So I don't want to hear, Bill, I'm 72, and Facebook isn't for me, and I have enough leads to keep me busy, and I don't know how to spell Ringy. Well, that's BS, okay? I'm not buying it. If you know enough to be dangerous, okay, you can use both of these platforms. If you have a son, a daughter, grandson, assistant, granddaughter, whatever it is, niece, nephew, to help you, okay, then even better. Okay, but I'm telling you, it's worth getting comfortable with these 2 platforms. And the reason why I'm saying this, okay, these are only a few months old, and look at the agent testimonials that we're getting. Okay, and by the way, these are all on our Facebook page, so you can't say, oh, Bill made these up for the webinar. You can go to our Facebook page and see what agents are saying about Ringy and our new social media lead program. Okay, I'm telling you, it's unreal. And by the way, Ian, top right corner, I did a few podcasts with him. He's been on our webinars. He's on the West Coast, younger guy. He's been crushing it over the phone even before this whole pandemic happened. Okay, so you should, by the way, listen to his podcasts and webinars. They're great. But as you can see, look what Ian wrote. I'm not going to get into each one because of time, but Tom, Dave, and then Ian from the West Coast, great testimonials. And this isn't even updated, by the way. If you go on our Facebook page, you'll see everything right there, but well worth it. So I'm just going to give you a 2-second overview on each platform. I'll start with the social media lead program. We negotiated 25% off for active Levinson agents. Okay, so what does that mean for you? What it means is you're getting a life insurance lead, no exam life insurance, up to $1 million. Okay, $30 a lead for the entire state. So if you are comfortable selling over the phone, I would do the entire state. For another $5, you can get a local lead within 50 miles. Okay, If you want to meet these prospects at Burger King or Polo Tropical, that's even better. Fine. I would definitely go for the local leads, minimum order of 10. And what's so cool about these leads, this isn't like just final expense or just mortgage protection or IUL. These are, like I said, $1 million, no exam life insurance leads. So you can pivot and take this prospect wherever you need to take them, whatever works best for them and you, okay? Great. That's why I always say just know the basics. Don't complicate things. Okay, I've seen unbelievable sales made from this program already, 100% exclusive. And what's so neat is they integrate into Ringy. So this is the easiest way to explain it. Think about this for a minute. If you're using the Ringy CRM tool, okay, the Ringy CRM tool is like your automated follow-up system, okay, without hiring a person full-time to do it for you or someone overseas, okay? Now, let's take these two programs, right hand, left hand, okay? Right hand is Ringy, left hand are the social media leads or any lead program, it doesn't matter, or any of your prospects, whatever it is, okay? So right hand Ringy, left hand is your lead program. So let's say Friday afternoon, you say, Bill, I'm going to give this a shot tomorrow. I'm going to buy 10 leads, okay? Great. Buy 10 leads and 5 p.m. comes and you checked out, right? You're going away for the holiday weekend, no problem. You come back, let's say Monday morning, for example, okay? And guess what happened? Your 10 leads that you bought Friday afternoon are already set up in your Ringy account. And guess what? All 10 leads already received a text message and an email from you, and possibly even a phone call if you want to set it up like that. So by the time you get back to your office or third bedroom, whatever it is, okay, Monday morning, 9 a.m., you have, let's say, 3 of the 10 appointments already set up for you because they clicked on your calendar and they picked a day and time that they wanted to speak life insurance. It's already done by Monday morning, and you didn't even do anything, okay? That's Ringy and the social media lead program working at its finest without you even clicking a button, okay? That's the way this works. And Ringy will take all of these leads, all of these prospects, everyone in your network, okay, which should be hundreds or thousands of people, and what it's going to do is send out a series, a campaign, a series of touch points that say, hey, this is Bill, the local South Florida life insurance guru, and by the way, I have this new Index Universal Life that has living benefits, the new kind of life insurance. When can we talk? When do you want to talk more? When can I run a quote? And click on my calendar below, okay? And it's going to send out a series of these touches until the consumer or your friend or someone in your network clicks and says Tuesday, 2 p.m. Now you get an email or a text on your own phone that says, Bill, you have an appointment, 2 p.m. Call Johnny Smith. He's ready to talk. It's going to do all of that for you. And guess what? Out of the numbers that we've already seen, okay, it doesn't matter if it's 13, we had someone put in 13 consumers or prospects or thousands, we're seeing a 10 to 25% return. What does that mean? That means out of 1,000 names, we're seeing 100 to 250 people that set an appointment within a week. Okay? That's unbelievable. These were friends or leads sitting on a shelf collecting dust. Okay? And by the way, with your discount, 30% off, you pay $69.95 a month with Ringy instead of the $99 for the first 6 months. Okay, so you get a big discount there. And that's huge. Okay, and I would use this if I was an agent today for everyone I know would be in my Ringy platform. Every single person, cousins, family members, friends, people I know from the gym, people I know from the car, anybody. Every single person would know that I sell life insurance, annuities, long-term care, supplemental products. Okay? Why? Because they're buying these products, just not from you. Okay? And here's the proof in the pudding is, again, the agents on the right-hand side. Or, again, go to our Facebook page, and you'll see what I'm talking about. Let's move forward. Okay, so another great lead program. Now, this is a neat, interesting program because this allows you, again, to pivot to IUL, to an annuity sale. This is a financial services request mailer, okay? And as you can see, we negotiated $150 savings for you, $500 for a 1,000-piece mail drop. Average rate of return is 1.5 to 2.25%. So this works great too. Now, obviously, it's a different type of prospect. Okay, these usually are larger sales, but it doesn't matter. Okay, it doesn't matter. It's up to you how you pivot, where you're going to take the prospect. All right, let's keep moving forward here. By the way, we're going to send out all of this information in our thank you email that you'll have this evening, and you'll have all the brochures, everything that you need to get started, everything we're touching on today. Okay, what's new at Levinson? I'm going to move real fast because I want to make sure Eric has plenty of time for our feature presentation. Carrier incentives. Now, a couple things I want to mention. AIG has the 5% IUL bonus incentive. We went over that last week. Now, obviously, yes, it's also an IUL, but very different story, and you're going to hear why in a few more minutes, but another chance to make a few bucks. 10% bonus on Prosperity Life. That's huge. They have some great niche impaired risk products that you need to have in your toolbox because not everybody is going to fit into a traditional company, as we know, especially when you're working these lead programs. Bestow, right, up to 1.5 million issued in 7 minutes or less. Okay, no exam, no nothing. That's huge. Okay, $500, 5 policies. That's a big deal on top of your commission and your agent of record. Okay, it's not like one of these other, you've heard these online companies where you just send them referrals. Okay, and they're the agent of record. Never do that, as we know. Anyway, let's keep moving. Middle section, Lafayette Life introduces the new legacy span sales concept, which ties into Mary Reed's concept beautifully. So I would definitely take a look at that. We'll include the brochure. Sagicor, another, like I said 10 times already, right? Everyone is talking and marketing IUL because of what's going on in the market and with other financial products, right? Everything is down. People are looking elsewhere. They want answers. They want a solution, okay? And that's why I've been marketing today's webinar as the one-stop shop for IUL. Let's keep moving. KCL, Kansas City Life, great longevity term product that helps you dial in a guarantee, never been done before. That's a big one. Okay, we have training on the training calendar on our website. You can check it out. Let's keep moving. One America lowered rates tremendously. If you had any clients you spoke to about One America, okay, for hybrid, you know the way I speak about Allianz and IUL, one-stop shop, One America is that one-stop shop for living benefits, for LTC with life, okay, because standalone LTC is almost a thing of the past. So this is a great alternative, just lowered premium tremendously. So I would definitely revisit those clients. We have new carriers coming on Insure Me Now Direct. Let's move over to the right-hand side. I'm going to touch on 2 things and I'm done. New health insurance department coming soon. We've been working on this for 7 years now. Okay, it was our dream to launch a Levinson and Associates health department in-house. Okay, well, we are about 4 to 8 weeks away from the launch. So I'm very excited about that. We'll have life, annuity, and health all under one roof, the Levinson way, which is obviously as close to 100% as possible. All right, let's keep moving forward. We have our new social media tip of the month. Check that out. We'll include it in the thank you email. And then there's 2 tech platforms that are going to help you tremendously. One is eRequirement, one is eUnderwriter. We talked about this at the expo. This is going to make your life so much easier. Why? Because it's going to get you paid faster and policies in force in about half the time. Okay, it takes all the guesswork out of underwriting, and eRequirement is basically an online platform that's free, that if you have an outstanding requirement needed for a SCUBA questionnaire, for example, everything is done online with e-sign, so no more snail mail and waiting weeks for the form to come back, and then you have to forward it, so it's going to change your world. And again, both of these tech platforms we pay for, so they're free. Okay, let's keep moving right along here. One more slide, and then I'm going to turn it over to Eric. So our top IUL carriers. Now, a couple things I want to make note of, and I want you to make note of. And by the way, speaking of note, I want you all to use that Q&A box, okay, in the question pane, okay, where you're going to answer the final incentive question at the end. We want to hear from you. Good, bad, and different questions. Please jump in. okay? And make sure you're taking notes. As you can see, Allianz top left corner highlighted in red, there's a reason. One-stop shop, and you're going to hear why in a minute. Again, okay, every red asterisk means SAGE scholarship approved. Okay, that's huge. The ultimate differentiator. Okay, especially with how crowded and noisy it is out there with 1.1 million agents in the country. Okay, you need to have that ultimate feather in your cap. What makes you unique? What can you market on Facebook? Those are the questions you need to ask yourself. Also, the green asterisk is our Stonewood consumer presentation software. These are the carriers that are 100% approved, on board, and compliant with the system. Okay, so make a note of that as well. They just added a very cool new lead function that we're going to talk about when Eric's done. But very, very neat stuff. Okay, we are done. Let's turn it over to Mr. Eric Johnson, my friend and VP over at Allianz. Eric, you there, buddy?
I'm here, Bill. Appreciate the opportunity to speak to everybody. A nice job. You always, make me excited, and love working with Levinson Associates.
Well, we feel the same. You know that, Eric.
Awesome. I'm going to take it away, guys. Thank you so much for your time. Really, really appreciate it, especially right before the holidays. We do have a couple really exciting announcements that I want to start with, and then from there, I got 4 sales ideas that I want to go through that can really help you, I think, tell the story of IUL. As you guys kind of review your book of business, I think just through this presentation, you guys are going to find some ample opportunity to be able to sit down with your clients and bring a new, fresh idea to them, especially given what's going on in these markets, that's going to make them say, this is exactly why you are my advisor. So first things first, exciting announcements. As you can see on this page, we just increased caps and par rates across the board. And so I want to just quickly touch on that. Our fixed account went from 4.3 to 4.5. Now that's really powerful, right? Now we're talking your fixed bucket, right? If you have a client that is terrified of the market, even though these have a 0 floor, if he is still saying, I'm really worried even with a 0, put him in a fix and say, hey, guess what? You can make 4.5% regardless of what the market does. Not too shabby. We just increased our trigger method from 7% to 7.75%. What does that mean? The trigger method is it's in the S&P 500, and anything that the S&P does positive for your crediting year, you will get a rate of return of 7.75%. So if the S&P literally does 0.001 positive, your client gets a 7.75%. Increase the monthly sum from 3.6 to 3.9. That is essentially like checks and balances. That's probably the most aggressive allocation option we offer. If you were to hit that cap, every single month for those 12 months, obviously you're going to get north of a 36% rate of return. Very, very powerful. If you have a client that's very bullish, I'd highly recommend at least looking at that option. And then looking at our core, right, our Bloomberg, PIMCO, and blended index options. Bill mentioned our rate lock and auto lock feature. That is available in that Bloomberg US Dynamic Balance ER Index and the PIMCO Tactical Balance ER Index that you see on the screen. And it is available in those options that you see there with the Select, Bonus, Classic, and Standard. Now I know you're probably asking, well, what does that mean? So in the select option, what that means essentially is that is a 40% multiplier. So if your client, let's say he's 100% allocated in the Bloomberg US Dynamic Balance ER Index, uncapped on the upside, and that is contractually guaranteed. We will never put a cap on that index. So if they got a 10% raw return, right? So they're point to point, the Bloomberg did 10% for them. You would take that number times that par rate that you see there of 160%, and then you would multiply that by the multiplier of 40%. So you take 10 times 1.6 times 1.4. And so on that 10% raw return, your client on their annual statement would see a 22.4% rate of return, and they would get all of it. It's not getting capped out at 10 or 12. They would literally get that 22.4% rate of return. Now that one does have a 1% asset charge. So if you take into that account, you're at 21.4. We illustrate right now at a 6.5% rate of return. They get a 21% rate of return in their first year. I think they're going to be pretty happy with you. Then we have a bonus option. That is a 15% multiplier. So the select is a 40% multiplier with a 1% asset charge. The bonus option is a 15% multiplier with no asset charge. So on that same 10% rate of return, you multiply that by that par rate times that 15% multiplier, they would get a 18.4% rate of return. Very powerful. The classic index that you see there, this one we rolled out last year, and this is not a multiplier, right? So you're not going to multiply by anything. You are going to add. It's an addition, and that is 0.9%. Now, the beautiful thing with the classic index, if you have very conservative clients that say, hey, 0 is your hero, I get that, but I don't want a 0, say, well, Allianz has a classic index where actually your floor is positive, and it's a positive 0.9%. So if your index does negative and you're allocated in the classic index, you would actually get a positive 0.9% rate of return. So in this example, on that 10% raw return, you take that 10 times that par rate of 145, and then you would add that 0.9%. So on that 10%, they would get 15.4% is the rate of return they would get. And then the standard option that you see there are no multipliers, there are no bonuses, it's just raw return times that par rate. And so you can see with the standard, with that very high par rate, if you have a client that says, hey, I don't want any extra bells and whistles, you look at that standard, that 10% raw return would still get them an 18.4% rate of return. And then that premium deposit fund rider that you see there at the bottom, that is for those clients that maybe have large lump sums that they want to give you, right? Hey, I inherited $500,000. I want to do an IUL. I love the concept. I get it. I just want to give you this check one time and be done. Instead of taking that money and buying, $10 million of death benefit, you can put it into that premium deposit fund rider. And what that's going to do is we are going to slow drip those premiums anywhere from 3 to 10 years into the policy. And while it sits with us, it's going to make 2%. Now, there is rumors on the street that actually was going to increase, hopefully in the next couple of weeks. Hopefully, I'm hoping for maybe to 3%. So it might go from 2 to 3. Now, obviously, that is not, don't take that to the bank, but there are rumors that premium discount rate is going to increase. So I just want to do a highlight real quick. These are the options that we offer when it comes to our allocations. And the unique thing with Allianz, guys, you can do a percentage into every single one that you see on the screen if you wanted to. Every single year, you get to sit down with your client on that annual review and say, how do you feel about the market? Oh, I'm extremely bullish. Fantastic. Let's look at XYZ options for the way you feel with this bullish opportunity. Got uncapped indexes. They have this trigger method. We can maybe do a blend between those two if you want to. Love it. Great. Hey, I'm extremely bearish. No problem. Let's put a portion into that fixed account and make 4.5%. Great. Love it. And on top of that, you can say, hey, they also offer this unique feature that no other carrier offers in that Bloomberg and PIMCO, where they have a rate lock feature. Now, what does that mean? What that means, if your client has a policy that goes in force today, and in six months from now, they're at that 10% rate of return that I mentioned in that example, right? Bloomberg takes off, it's at a 10% raw return. Your client goes, that's a really good return, and I'm really worried about volatility for the back half of the year until my anniversary. You can make a phone call or go online and lock in that 10% rate of return for the rest of the year. So if the market plummets, right, instead of that 10%, in a typical IUL, right, if he's up 10, and then that back half of the year that he was worried about those last 6 months, the market tanks, and instead of a 10, he got a 2. With the rate lock feature, you don't even have to worry about that. You can lock that in right there on the spot. And Allianz took it a step further with an auto lock feature. Now your client, same client, let's say that policy goes in force today, they can set an upper target number. So they say, hey, if this does get to 10, I want it to automatically lock in for me, and it will. The beautiful thing with working with Levinson and Associates, guys, is they get monthly reports of all of their IUL business with us that is in the rate lock feature. Anything above a 7% rate of return, they will see, and they will let you know. And what an awesome phone call for you and his advisor to make to your client. Say, hey, remember that IUL we put you in? We illustrated 6.5. Right now it's at a 9. And you can actually lock that in for the remainder of the year. I don't know a whole lot of other assets that you can do that. So very powerful, and every year you can change, right? Go to any of the allocation options that we offer. So with that, I want to get into some of the sales ideas, guys. Like Bill said, please, seriously, ask questions, you know, participate as much as you guys want to, feel comfortable, and let's just have a little fun with this. So today, like I mentioned, I want to talk to you guys about 4 ideas. I want you to think about your book of business, right? Just close your eyes, imagine that book of business that you have. And I promise, out of these 4, right, there is a client that fits one of these buckets, right? So the first one I want to talk about, balancing risk and return potential. I think right off the bat, you're probably saying everybody, right? Everyone is worried about what's going on, right? You know, Bitcoin's under 20,000. The market's, you know, worst first half of the year we've seen since, you know, 08, right? I mean, everyone's looking at 401ks and, you know, getting weak in the knees. I mean, I get it. I looked at mine the other day and I was down 25%, right? I get it. It's an ample, and rates are rising, right? Gas is at $5. Rates are increasing more. You know, 30-year mortgage now is north of 6%, right? I mean, everything is just like, what is happening? And from everything we're hearing, right, it's not going to be a soft landing. What a great opportunity to sit down with your clients and say, hey, let's talk about risk. How are you feeling right now? What if there's an option of providing some downside protection? Right? And I also want to talk about looking at maybe some of those idle assets, right? Some of it's maybe not money that's sitting on the sideline, right? Some of that money and saying, hey, inflation's at the highest we've seen in 40 years. That money that you have sitting there is not doing anything but losing money for you. Maybe we look at those idle assets and say, hey, what if we took out this IUL policy, maybe got some, you know, positive return and maybe turn it into a legacy just with the idle assets. Then we'll look at talking about the impact of dying too soon. I'm sure some of you on this call have delivered a death claim in your life, and you know the power of what this product is, right? I mean, at the end of the day, guys, this is a life insurance policy, right? And the impact, you know, of someone dying too soon, what that can do to a family could be detrimental. And by you taking the time to sit down with your clients and reviewing their book of business and saying, hey, let's put in this bottom layer of protection to make sure that God forbid something happens to you, you know, your spouse and kids aren't selling their house. They're not going to find a third job. We are making sure we take care of them. So we're gonna look at what that could do. And then lastly, I want to look at just the efficiency of a retirement portfolio, right? We probably have plenty of clients in our book of business as we think about it that are getting closer and closer to retirement or about to go into retirement. How does the IUL fit into that book as well? So let's get into balancing risk and return potential. Like I mentioned, guys, we are going through this financial risk that you see here on the left side, right? Market volatility at, you know, levels we haven't seen in a long time. Taxes are increasing. Longevity is increasing. People are living longer, right? We do these Monte Carlos and all these things and say, hey, you're gonna die at 88 years old. Perfect. Let's make sure, right? Money's here. What if they lived to 95 or 100? How do we plan for that? Inflation, I mean, you know, 10%, highest we've seen in decades. I mean, I filled up my truck, you know, today. It was $100, right? So all these things are going on literally as we speak. I think the market, at least when I checked this morning, it was down like 1.5%. I mean, all these things are happening. Everyone is worried. Everyone's going, what is going on, right? Equities, fixed income isn't even doing much. Obviously, money market cash accounts aren't doing anything. Real estate holdings are, you know, starting not to be that great with everything increasing. And so now is that time, guys, to really sit down with your clients and say, hey, let's look at maybe doing a little diversifying of this portfolio with some low correlated assets, and one that reacts maybe a little differently to market environments, or at least provides a level of protection from the markets, right? That way your clients have, you know, the opportunity to grow that portfolio with fewer bumps along the way, right? What a great opportunity. I mean, in all honesty, right? Markets are, if markets were straight up right now, right? None of these things would matter. Everyone would be like, well, hey, I'm a stock picker. I'm a winner. I'm doing great. My 401k is up 50%. Everything is golden. It's not the case. That's not the picture right now. Yeah, we've seen a ride that has been unbelievable. 2010 on, right? The market has just gone almost straight line up. Everyone thinks they can do, right, everything. Everyone thinks, hey, I know how to pick stocks. What about when times are like this? What a great way to sit down and just say, hey, we're not going to take all your money out of the market. No, we're not going to do that. Let's just, now's the time to look at maybe carving away a section to make sure we are protecting that downside. And the IUL can do all these different things, right? In times of this volatile markets, that IUL can be a way to help really reduce that overall risk in their portfolio, right? And they got that income tax-free death benefit, can really help beneficiaries cover various financial concerns, right? Income replacement, final expenses, mortgages, other debts, right? College funding, all these other things. And not to mention with the death benefit, right? Like I said, this is a life insurance, but on top of that, Allianz offers some really unique ways, guys, of essentially making this an asset outside of just life insurance, right? Like I mentioned, that accumulation potential through our fixed or allocated options, rate lock features, tax advantages. We're talking about pulling money out of this thing, right? This thing builds up, builds up, builds up. And instead of paying, Uncle Sam 35, 40% on those, on that money, you're pulling out all those gains tax free. Let me say it again. You are pulling out that money that is built up tax free. Your client's not paying a dime to Uncle Sam on this money that's going in his pocket. And not to mention living advantages. I know Bill touched on that as well, but right, like, accumulation, access to a portion of that death benefit for chronic or terminal illness, right? So all these things are checking a box with just one simple product and one idea that you can just sit down and talk to your client, just say, hey, we have all these other things in place and it's great. I think now might be a great time to look at this. Just, let's carve out one section and just look what this tool can do. Top of that, right? Tax environment. Two possible tax scenarios that could occur when clients are either making their contributions or taking distributions from their retirement assets. Right, you got the lower tax environment. I think we all probably agree, probably not going to happen. But let's say for somehow, some way it does. During that contribution phase, if they want to make contributions to those retirement vehicles in this lower tax environment, may consider placing additional funds into a tax-free source like the IUL, right? Because those contributions are made with after-tax dollars. Then when it comes to that distribution phase, right? If the tax rate is lower when they retire than it was obviously when they were doing the, the funding, they may consider accessing more from sources that are more like those taxable sources, right? Like maybe that 401k if it wasn't in a Roth, right? Those types of things. If we are in that higher tax environment, which, no one's got a crystal ball, but probably might be, where we're heading, then they may consider placing, some additional funds into financial vehicles where contributions might be made with, pre-tax dollars. Might make sense. But then when it comes to that distribution phase, right, and we are in a higher tax environment, which, like I said, I think we all agree we probably will be just based on the rate that we have printed money over the last decade. I saw a chart the other day that in 2008 with the financial crisis, the Fed printed it was like $4 trillion to fight the crisis. Fast forward to COVID, and what the Fed did to fight that crisis was print $22 trillion. Now, if you think we're not going to pay for that one way or another down the road, by all means, I'd love to hear why. But they got to find that, they got to repay that money, some way, somehow, and it's probably going to be through taxes, increasing taxes, right? So if the tax rate is higher when they retire than it was while they were doing that accumulation phase, perfect time to be looking at accessing tax-free sources like an IUL, right? You're still got the death benefit in there, but now you can access money tax-free with the same product. It's fantastic. Now, making those idle assets go further. Idle assets in retirement portfolio are, those assets that you don't really need to draw on to maintain your lifestyle, but it may be something you intend to leave to beneficiaries, or maybe they have a charitable interest they're interested in. But your clients aren't going to want to let those idle assets truly just sit idle, especially with inflation doing what it's doing. Over time with rising, taxes and market downturns, that could really crush the value of these assets. And so without proper planning, right, taxes could also affect beneficiaries if they inherit this legacy. And so what a great opportunity for you as the advisor to sit down with them and say, let's look at these assets. So there's 4 questions I want you guys to consider, ask your clients when you're looking at these idle assets, as you can see here on the screen, right? How concerned are you that your money is protected from volatility and taxes? You're probably gonna say, yeah, I'm very concerned. I mean, this is my money, this is my assets, I built these up. I don't want it to just poof, be gone. And at the same time, when I leave it to my, my beneficiaries, whoever it may be, I don't want Uncle Sam to come in and rip half of it off. Over time, you want, right? Would your clients want or expect these assets to increase in value? I think we all agree, absolutely they would. Do you want to be able to pass, the money efficiently to your beneficiaries versus it maybe going to probate or something like that, right? And then lastly, would you like to be able to access that money, God forbid, if you got into an emergency? I think they would say yes to all these questions. And so you'd say, well, they'd look at you and say, well, is there a product that can do this? And you'd say, yes, there is. Allianz IUL, right? It checks and it helps address all those 4 concerns. Protection, right? You got the death benefit, tax-free to your loved ones. Accumulation potential, right? I went over our allocation options that we offer. I can tell you last year with our rate lock feature, the average locked-in rate on over 9,000 policies just last year was 11.83%. That was the average locked-in rate last year. So accumulation potential, it is absolutely there. Like I mentioned, guys, uncapped indexes with protection on the downside. Plus you have a rate lock feature. Efficient transfer, right? The death benefit avoids probate and goes directly to those beneficiaries. It's fantastic. And then the last one, guys, is access to that money. And I haven't really touched on the loans when it comes to our product because those are also very powerful. But clients have access to any of that cash value through a policy loan. We offer 2 different policy loans. You have a fixed and a participating loan, right? Our participating loan, this is very important if you have a client that's in a different carrier with an IUL or a whole life, whatever it may be, and they're looking at accessing that money, really do a hard look at that, because look at what the guaranteed max loan rate is. We are in a rising interest environment. You don't think they're going to start to increase the loan interest that they charge you to borrow money? At Allianz, that is contractually guaranteed to be 5%. That will never change for the life of the contract. Interest rates can go to 30. They could charge 5% on that money, and that money can still work for them. So if you have clients that, if you get the IUL concept or a whole life concept, wherever it may be, you have clients that are in these products building cash value, might be a time to do a policy review. Look at the ins and outs. How do we access the money now that we're actually going to be thinking about retirement? Are we in the best vehicle possible? I've seen in the last probably 6 months, I can't even keep count how many 1035 exchanges are coming across my desk, because people are getting into that final stage and they want to be able to pull money out, and they're saying there's a better tool out there to use to access my money the most efficient way possible. Right? Technology gets better over time. These products get better over time. And this is one of the best IULs out there, hands down, when it comes to building cash and pulling it out to use in retirement. Now, impact of dying too soon, right? Like I mentioned, if you guys have delivered a death claim in your life, number one, that's awful. But, what you are doing for them is you are just lifting one burden for them. I mean, what an awesome thing that you put your clients in this tool, and now you get to deliver this, this big chunk of money to them and say, hey, you don't have to worry, at least financially right now. Fantastic. So in this scenario, guys, I just want to, paint the picture. We got Jason, a 40-year-old male, married, 2 kids. He wants $1 million when he retires at 65. He also wants to obviously, provide for his loved ones. So 40-year-old, he's going to put in $26,000 a year into a retirement vehicle, and we'll assume a 6% rate annual for rate of return. So in this scenario, right, he wanted it by 65. As you can see here, he'll hit that $1 million by the time he's 60. Not bad. That's assuming a 6% rate of return. But what happens, God forbid, if Jason died when he was 45 years old? How much would he leave to his loved one? He was planning on $1 million, and instead, unforeseen events happen. He's only leaving his family $155,000. 2 kids. Wife doesn't work. $155,000 isn't going to go very far. And that was accruing at a 6% interest rate, right? So he's going to pay taxes probably on that money as well. Now, what if you took that same scenario? Yeah, you're sitting down with Jason. He's telling you I have $26,000 a year. I'm ready to, invest for my retirement outside of my 401k, those types of things. And you said, fantastic. Let's do 13,000 in this retirement account that you like. Let's do 13,000 into an IUL. What would that look like? We're not changing any dollar amounts. We are just, right, adding a new product, right? We're adding just another asset in there with downside protection. What would that look like? So you can see here on this slide, same story, right? Instead of at 60, when you would get that $1 million, it'd be at 62. So still before 65, doing the same dollar amounts, but now, right, one's in that retirement savings, the other's in an IUL policy. But same thing, what happens if he died at 45? Same dollar amounts, guys. He's still giving you that $26,000, but 5 years into it, he passes away. What happens? Instead of leaving his family $155,000, he's going to leave them over $1 million. And a big chunk of that, 1,050,000 of it is tax-free. So now his wife, who is obviously, distraught, losing it, and then financially, she doesn't even know what to do. She's thinking about, I got to sell the house, kids aren't going to be able to go to college. And you give her a check of over $1 million and say, Jason made sure that you guys were able to do what needed to be done. Very powerful. And that's also, like I said, tax-free. So lastly, I want to look at just the efficiencies of a retirement portfolio, right? Negative market environments like we are in can have a significant impact on a client's portfolio. I'm sure many of you have had numerous phone calls from your clients going, what in the world is going on? My portfolio is down 30%. What the heck, right? And especially if people are near retirement, right? Now they are starting to bank on this money. We get a 40% down year, that could blow up a retirement plan. And it's putting, pressure on your client's portfolio. They need to meet these financial objectives, right? Manage risk, diversify, asset protection, all these things. So let's look at another hypothetical example. Got Mark, 65. You can see here his objectives. He wants to leave, obviously, he wants to protect his family. Then he wants to have access to $125,000 per year in retirement to maintain, right, their standard of living. He's got a fixed annuity that's going to pay him $30,000 a year forever. Social Security, hopefully it's around in 20 years, pay him $20,000 a year. Then he has a personal retirement account that he'll draw on that'll cover $75,000 per year. So in this example, right, just what we see here, not bad, right? So what I would consider here, guys, when looking at this, is Mark's retirement account is not protected. It is exposed to market risk, and negative returns can really, really affect this. If you look at this chart, this is a very impressive bull market right here. Just looking at this, right? I see 1, 2, 3, 4, 5 down years over a 25-year period. And the down years aren't even significant, right? 10% maybe. So looking at this is probably the absolute best case scenario right here. Comes in with 1.5, draws $75,000 a year out of this thing. He's got 1.6 when he's 90. And that's in an extremely bull market, right? Market we're in right now, right, down 20%. What would that do to this portfolio? It could blow it up. Now, what if you said to him, hey, let's add an IUL, and on the down years, we're going to draw from the IUL, not your $75,000 a year that you saved in your retirement account. Right? So when the market's negative, instead of double drawing down, he's only going to take from the IUL, or maybe he'll take less, right? He'll take, 55,000 or 60,000 from his IUL and only draw on 10 or 15 from his retirement account versus the full 75,000. That way he's not double dipping, right? And on top of that, God forbid something happens to him over the next 25 years, he's got that extra layer of protection with the death benefit. But what a nice thing to have all these different levers, right? Hey, got my annuity, Social Security, got my retirement account I'm drawing. Oh, I have this IUL too that's got downside protection. If the market's down big, this is getting a zero on my retirement account's down 20%. I'm going to draw more from the account that's getting a zero and less on the one that's down 20%. What a nice leverage to say, hey, boom, turn that one on this year. Don't worry about that retirement account for this year. Now your watermark is even less to be able to get back to positive, right? All because you just sat down and said, hey, I have a new idea for you. Let's look at some downside protection. Let's take a little bit of risk out of this. And at the same time, we can do a legacy planning, we can do all these different things. And not to mention, this policy can be put up for collateral and loans, right? Hey, I want to build a cabin in my retirement. That can be used as collateral to get you a better interest rate, right? Because a bank's going to say, hey, they have this $300,000 of cash value. It's got downside protection, so when the market tanks, it's not going to be down 50. It's going to get a zero. Yeah, all day we'll take that as collateral and give you a 4% rate instead of an 8 that we were originally going to give you, all with one product. Resources, obviously you guys are, I have about 25 different shops that I'm in charge of, and I can say hands down Levinson Associates is easily one of the best. I've spent probably more time this year with them than a few of my other shops, and the reason is just what they are doing for you guys at the advisor level is amazing. I personally used to be an advisor, and I never got the resources and the tools that like Bill was just going through. I've never seen that with any of my shops that I've worked with. I've never seen a shop that takes care of their advisors so well and offers them so much. So when it comes to marketing resources, I mean, you guys are in the best hands with Andrew and Bill and Carrie. I mean, you guys know, right? So when it comes to those types of things, not a whole lot I can do. I would just say that congrats to you guys for working with one of the best in the business. And with that, guys, I just want to say thank you so much for your time. I hope you took something away where you can say, hey, let's look at my book of business and say, XYZ client, I need to sit down with them and talk to them about this idea, especially given what's going on in the markets. So thank you so much, Bill, Andrew. I really appreciate the time, guys.
Eric, that was spot on. Perfect. You talk about stories to tell, and now you have plenty of them with, in my opinion, the one-stop shop IUL company that has pretty much all the bases covered for you as an agent advisor. So that was fantastic. I learned something as well, so always love that. So real fast, I'm going to take about 3 to 4 more minutes, and then we'll ask our question of the day. This is going to be quick, so just make sure you're laser focused. If you already have an Allianz contract with another IMO, I'm sorry. No, I'd love you to switch it over to Levinson, and we match or most of the time beat your commission grid, plus you get free leads or cash for contracting. So as soon as you place your first app, you're in. That's it. That's simple. Okay, we have 2 coupons there on the site, contracting to get started. If it's a transfer, that's fine too. The IUL experience is all of our resources, some of the things Eric just touched on and why it's so great to be a Levinson agent. Everything is right here. It's our version of the one-stop IUL shop called the IULexperience.com. So everything is there. Most of this stuff is free, so you got to take advantage and leverage. The next slide is our consumer approved presentation system just for IUL. And basically what this does, it explains IUL to a consumer in layman's terms and shows all of the value add and basically does the selling for you. Okay, plus they have a prospecting book that you can give out to consumers and it sets up the appointment for you. They also just literally launched a week ago this new list builder and lead generation tool. So as long as you're a member, okay, and by the way, you get a discount if you're a Levinson agent, you get access to this. And if you're not a member and you just want one of the illustrations to present to a client, we can run these for you for free. Okay, so again, use what we have to offer. All right, next slide real quick. We are the pilot agency for iPipeline, the new iSolve IUL quoting engine, and those are all the carriers that are approved today, bottom right corner. This is so cool. It's the first time ever. It's like running a term quote, but you're running IUL quotes, and the difference is when you put in the basic information about your consumer, let's say they see any carrier, okay, top right corner, they pick any company, and you hit proceed, it takes all of that information, drops it into a drop ticket or an e-application, so you're already halfway home. Okay, and you have a few more minutes of application to fill out, and you and the consumer are done. So it's very cool. Allianz is in the works as we speak. So and this is free, again, for all active Levinson agents. Okay, premium finance resources. Like I said earlier, we have two of the top vendors in the industry, and Allianz is a great go-to. So definitely ask us about premium finance if you have that perfect candidate. It doesn't even have to be perfect. Okay, those are a couple of the bullets there in front of you. If you want to take a quick look, this was a sample case, and we'll include this in the thank you email. Okay, Bill Levinson Experience Podcast. This is a great tool, another freebie, and basically what I do is handpick each presenter, okay? And let's just say it's professional baseball, NFL, NBA. We have professional athletes from all different sides. Industry guru Gary Vaynerchuk, estate planning attorney Lauren Berkland. Larry runs the largest automobile dealership. And what's so cool about all of these guest speakers is they are all so laser focused and they all understand branding and marketing, and you can learn a little something from everyone. Bill Atlee's the founder of iPipeline. I mean, that whole platform started over a beer at a bar in Pennsylvania. I mean, some of these stories are great. Plus MDRT agents that I interviewed for an hour, so you can really learn and leverage and change your business for the new year. And then on the bottom there, the next presenter is Michelle, who's going to be heading up our Levinson Health Department. Future trainings, that's what you're on right now. These are live weekly webinars. So every single Tuesday, Wednesday, Thursday, we have Agency Automator hosted by Kevin. And then what you're on today is in the bottom left corner. The next one up is National Western Life, which is next Thursday. And then just under that, Symetra is rolling out a new IUL product. So we're bringing Symetra back to the surface on the 21st. On the right side, these are Ringy personalized training webinars. So we pick a different topic for each series. So we basically broke it down into 4 parts. We already did part 1, which is on our YouTube channel or our website, and then part 2, 3, and 4 is just below that. But Ringy is the tool that I went over earlier. It's a no-brainer if you're an agent in 2022 and moving forward. Okay, I can't even say enough great about Ringy. So there you have it. Make sure you're on those trainings. The last slide, question of the day, and I know we went a little over, and I apologize. By the way, we had a record number of attendees join us today, so my hat goes off to you, especially right before a holiday weekend. And I mean that. I hope you walked away with a nugget or two, and I hope you have a new story to tell about IUL, especially in this market right now. So we're going to have real quick our Positive Tuesday quote, and then we're going to move over to the question of the day. So this was Positive Tuesday for this week. Complexity is the enemy of execution. Simplicity is its ally. So real quick, I say back to basics on my hashtag there. Keep it simple, right? You remember the old KISS phrase, right? Keep it very simple, black and white, right? And go out there, figure out your story, and take Ringy and get it out to everyone. That's it. Use social media. Leverage YouTube. Have your spouse hold up your smartphone tonight and talk about this new IUL story, and then put it out on all your social media platforms, on YouTube, and it's free. At the end of the day, it costs you nothing. And if you get 1 or 2 people that say, hey, Bill, I want to learn more, and you make one new sale that was $12,000 a commission, okay, great. Okay, that's what you learned on this last 60-minute webinar. Okay, I'm telling you, I can't stress it enough, especially in today's environment. Everybody is on social media, Facebook, LinkedIn, and you got to be present. You got to be out there. Okay, question of the day, and you have to answer after I ask the question. Okay, so no cheating here. Okay, whoever answers first and correctly wins the Fire 8 tablet and IUL prospecting book. Plus, what I'm going to do for second and third place, I'm giving away more IUL prospecting books and Mary Reed prospecting books as well. Okay, so we'll have the grand prize winner. Whoever comes in second or third also wins. That's my little apology for the first 5 minutes. So the question is, I keep mentioning that Ringy CRM tool. Levinson agents get a discount. Okay, the first 6 months, tell me how much it costs you as an active Levinson agent per month. Okay, for the first 6 months, you get a discount. How much is it per month as a Levinson agent for the Ringy CRM platform? Tell me the cost per month, and you win. We're going to look right now and see who came in first and who was correct. And then, like I said, number 2 and 3, you're getting books as well. Andrew, tell me who was number 1.
Okay, number 1 was Alan G. Alan G,
congratulations. The price $69.95. It's 30% off. So that's huge. Take advantage. Alan G, congrats. And then number 2 and 3 will mail out your books, and we'll post this on our Facebook page. So you can check there to look for your name. And congrats again. Have a wonderful holiday weekend. Happy 4th. Let's enjoy, get the story out, use these nuggets. We'll see you next week. Thanks again. Safe holiday to everyone.